There's so much happening in the property market when it comes to investing. And I have with me a very special guest, Tiffy, who's the CEO of Wealthi. Welcome. It's great to see you again.
Thanks, Peter, for having me. How are you?
Yeah, really good. Bit tired after a long year.
Yes.
This has been a very, very long year, but we're coming into the end of 2025, and I wanted to invite you today to kind of see where you're seeing the property investment market, where you see opportunities, where you see traps. And I also want to tap into your expertise about what makes a good property investment, whether you're buying it in your own name or a super fund, the fundamentals of good property investment. But let's start off with the market. How are you seeing the market and how are you reading it?
So we're coming to the end of 2025, and definitely back in Feb with the first rate cut, we saw a shift. That shift brought an improved market sentiment, and definitely you can see how month on month it gets improving and getting better. So more growth than the month before, an acceleration, right? So I think when we're thinking demand is still strong, supply is super tight, and definitely the fundamentals are there for this to keep going on and on, as in not just growing, but also that growth accelerating towards the next 12 months, let's call it.
Now, you have a very interesting vantage point because you work with a lot of builders and developers. So you see supply before it hits the market, right? Yeah. What does supply look like? How much more challenging is it getting? And where are we relative to the past 5 years from your vantage point?
So I think developers are still struggling to make deals necessarily work. And so from what's coming in the next 12 to 24 months, there's not much supply coming. So you can already see as of today, the construction approval rates are significantly lower than what it was during the last 5 years. And that's the thing. When you think about supply coming in, anything that's being planned today hits the market in 2 to 3 years' time, probably, right? When we're talking bigger developments. So the fact that you don't have that many approvals happening right now, that means it's not something that can be solved and turned around very fast.
Why is it so difficult and expensive for developers to bring on board? And I'm going to get to the next question about how people can utilize that, but paint a picture for the average property investor that doesn't know how challenging it is.
So costs of construction have been significantly above the CPI average, right? If we're talking 3% annual inflation, construction inflation has been maybe 3 times that. And what that means is when any developer is working on their feasibility, it's still a challenge to forecast what's going to happen with materials. And when we look at people in the trades, they're still depending on the markets, but it's still pretty tough to find good trades out there, right? So that's why it's still very hard when you think about interest rates have come down, but not enough. And the combination of all of those factors make it really, really hard. Having to pay high interest. We're not as high, but we're still in a sort of high-ish interest rate period, right?
Definitely.
Yeah.
And so from the investors that you see in your business and the conversations that you have, what's the appetite? What is the everyday investor? What are their price points? What do they want? Where's the appetite for that demand?
Definitely below the $1 million mark.
Yep.
I want to say that you would find most of them sitting in the $600K to $1 million.
Yep.
That's the sweet spot. And what they're after, I think people want the capital growth. That's what Australia is famous for. And when we're thinking about capital growth, yes, you can, of course, find capital growth at $2-3 million mark, but most of the investors that we work with, which are just starting that investment journey, they don't have the borrowing capacity and they cannot afford a cash flow. So they're trying to find that sweet spot between a high growth area, but also a good, strong cash flow.
So when you're trying to generate too much cash flow, your initial investment needs to be higher.
Yeah.
Is that right? And then it gets expensive to generate that excess cash flow.
Yeah, and a lot of people struggle to understand that you can always put a bigger deposit and borrow less money.
Yeah.
But because the reality is that most people are struggling to, saving your first $100,000 is really, really hard, right?
Yeah.
And so when you're trying to get your first one, that's the hardest part, like trying to achieve the deposit. When you're going for your second one, the challenges are different because you might be sitting on equity. Great, that will help you. But if you're tight on borrowing capacity, that's difficult. And also, what's the biggest struggle when you're going for a second or third is adapting your brain that the prices that you were used to when you bought your previous property, they have moved. And they might have moved significantly.
That's true.
So adapting your brain that you found something great at 600, but now you have to spend 850, right? That takes a while, really. And that reality check hits people hard.
Different world.
Yeah.
Tiffy, with clients that are looking at purchasing in their self-managed super fund, it's usually the ones that you're talking about, the second or the third property.
Yeah.
Can you work in the brand new space? Yes. A lot of the product that you do is brand new builds and it has tax advantages and everything else. Can someone buy brand new in a self-managed super fund if it's not finished yet?
Definitely they can. And we are currently working with a couple of clients in that specific situation. One of them purchasing something that is about to be delivered before Christmas.
Yep.
So we're close enough, but it's still brand new and it's considered off the plan. And another one thinking, okay, I'm not that far away from the amount of money that I'm after. And he basically put a deposit for an off the plan, giving himself 2 years to contribute to have plenty of money for that. So.
Awesome. And so in that instance, they just have to put the deposit and then the lending happens when the property is ready?
Correct.
Awesome. And which markets? I spoke to Jared from Dot and Cross It earlier, and he said about 7 out of 10 property buyers are actually buying in Victoria.
Wow.
That's what he's seeing. Which geographies are you seeing the most active or the most opportunities in?
So there's two different segments and activity. So when you just simply look at Cotality's numbers, you would assume that all of the people are wanting to buy in the tier 2 cities such as Brisbane, Adelaide and Perth. And that was really, really hot 12 months ago, was a double-digit growth for the year. Now it's still in growth. And it has been a winner in the last 24 months, but you can definitely see how that growth is definitely not double digit. And those cities, tier 1 cities like Sydney, Melbourne and Canberra, which is an in-between a city tier 1 and tier 2, those markets that didn't do as well during the high interest rate period have massively started recovering as of Feb. And what makes the biggest benefit or why Melbourne is the big winner is because now it's the 6th most expensive city in Australia, whereas before you would have thought Brisbane, Adelaide and Perth are affordable. They're not affordable anymore. And that's why Melbourne has a lot to give investors right now. I definitely see buying, for instance, you can go for something very easy, high demand in the inner city. It could be townhouses or apartments, and you're not even gonna sweat it. There's plenty of demand there that you'll rent it fast. It's all good. If you want something like a house, we're seeing people willing to go a bit further away from the CBD. And to me, any of those purchases feel as if you would have purchased. I purchased in Perth back in 2022, and it was in a slow market, coming out of a slow market. And I simply chose Perth because I could see a massive price gap with two comparable cities, which were Adelaide and Brisbane. And I see in Melbourne that right now it's so much more affordable than Sydney, which is the only comparable city. So I think most people are seeing that. And I don't want to get ahead of myself, but if you ask me what is going to be the biggest winner for 2026, for me, it's going to be Melbourne.
Yeah, wow.
Yeah.
And do you think it's better to go into a set and forget apartment townhouse in a city, go to sleep at night, not worry about tenants, or take the extra plunge and go outer suburbs where you get more land, but you tell us, what are the consequences with getting more land but further out?
So it's a great question because I think it comes down to personal preferences. And people think everything's going to be spectacular. And when you think, wow, land, houses, and then you have bigger maintenance.
Yeah.
And in my specific scenario where I invested further away a few times, when demand might not be as strong in, like, for instance, a winter, right? And so you'll always have more and more people coming to the big cities wanting to live close by, right? Like anyone who migrates to Australia will want to be as close as possible to the CBD. And that's where you get a lot of demand. And for instance, I had one of my properties that this year didn't perform as well from a rental point of view. And for me, it's always thinking, this is a long-term strategy. It's okay. I was able, like, it wasn't anything outrageous, right? So for me, I know it can do a lot better. And I know this has massive potential to grow over the next 10 and 20 years. When I'll think probably in 5 years' time, I'm going to look back and already forgotten about this year to begin with, right?
Sure.
Like you forget the...
Yeah, definitely.
But just people, think that bigger is better. And like, or cheap will give you a great cash flow. And usually that's not the case.
There's always a sacrifice,
yes.
right? Yeah.
Nothing's perfect.
And property investment is a business.
Yeah.
You know, and like every single business, you're going to need patience. You're going to need to invest in times. You're going to do really well sometimes and reap the benefit. But there are going to be other times where you got to do the hard work.
I met people who bought in Brisbane in 2015 and held it for 5 years. They think, 5 years is long enough, and sold it in 2020 at a loss, right? And they would have, in the lower end of the market, probably by now, they would have made $500,000 in equity if they would have stayed a full 10 years, for instance. Right. So it is about patience. No one wants to have patience.
You mentioned one mistake, which is being impatient.
Yeah.
What are some other mistakes that people make when they go into the market and, they don't execute that well?
Okay, so one that I'm seeing as a trending topic right now, especially because of all of the announcements with incentives, 5%, home guarantee scheme, etc., is a lot of people that are wanting to get into the market, and that's the dream, right? They haven't thought through about a strategy, what they're trying to achieve, and especially when they're thinking a bit more emotionally about their own home. So they're like, wow, this is my chance now with the deposit that I've got saved. I haven't achieved what I was aiming for when I needed a 10 or 20%, but now I can do it. And because they're treating it as a home and not an investment, they don't even think about running numbers of what it will mean, that monthly mortgage, for instance. So the fact is, I know when I'm having those conversations, because we talk numbers every day, that someone that is struggling to save, for instance, they save with a lot of effort $2,000 a month, and they now want to go and do 95% LVR, so borrowing 95% from the purchase price. They will have to pay principal and interest. Like, they'll simply go to living paycheck to paycheck. Yeah. And that's very risky.
So a lot of people hear this 5% deposit scheme and say, great, I only need 50 grand to buy $1 million house, but they don't think about the 950 that they need to borrow and whether they can afford that.
That's it. And that's the thing, like, once even those people that are not so used to looking at numbers, once we show them the numbers, they're like, the reality is I'm nowhere close to being able to pay on a monthly basis this mortgage, right? So that's probably has been a trending topic of mistakes that I've been, people simply saying, now I can, and not figuring out what the numbers are. And the other one is when people end up doing more of the emotional decisions, right? And I can't even be talking about investors who are simply lost.
Yeah.
And instead of trying to define what they're trying to achieve and putting a strategy together, they simply just, I loved this, or my neighbor or my friend or my brother told me. And what they hear at a barbecue becomes like, if they're doing it, I should be doing it. And there's no strategy behind it.
So buying on emotion rather than buying on merit.
Yes.
And what are the kind of top 3 things that you look for if I was to call you and pitch you a deal and you only had 60 seconds, what are the top 3 things that you'd ask me to screen, whether that's a good deal or not, whether you're buying your own name, SMSF, whatever, as an investment?
I would try and validate that there's definitely growing demand in the area. So population growth is a really important one, because if the population is declining, you don't want to be investing there. And you want to be close to jobs, not depending on single industries or very few industries. You want to go for like a good amount of work, connectivity, close to highways, public transport, and amenities, right? Like you want to be able to go to the shops and they are close by. Those, to me, are the basics. You don't have to overcomplicate things.
Right.
From a supply point of view, from a supply point of view, you definitely want to make sure that you're not going for an area that is like unlimited supply, and you want to go good quality.
So it sounds like to me, everything that you laid out there is more about the area, the position, the demand, very little about the property, I guess because you'll get to the property, right? But your filter is always show me where, show me what's happening in this area. So you invest around areas and locations more than actual aesthetics first, right?
Definitely, because I want to make sure before I start looking at properties and the more emotional side of me starting getting excited, I want to define what makes strategic sense for what I'm trying to achieve. And that's why I start from bigger to smaller, really.
Yeah. Awesome. Tiffy, last question. Yeah. What's your prediction for the property market 2026? I think I know what you're going to say, but kind of how are you feeling going into 2026 from an investment hat on? I'm
very excited, right?
Awesome. Perfect.
I'm very excited because it's going to be a massive year. Definitely the prices will keep going up, and I can already see how we're transitioning. 2025 to me feels a bit similar to 2020. So it was a year of growth, but not everyone was excited. And there were a lot of people that were on the fence trying to figure out if it was the correct time. And 2026 for me is going to be 2021 going towards 2022, where the market accelerates and you start seeing it in every newspaper, and every month there's a new record high. And that will come from, I think as we're recording this, we still have cash rate at 3.6%. Most likely we're going to see around Feb, maybe, an interest rate decline, followed by stabilizing the market. Yep. And that will bring more demand combined with all of the incentives from the government and everyone talking about it and the fear of missing out. And so definitely overall, it's going to get hotter and hotter. And from which markets, I already said this before, but which markets I really, really like, I think the tier 1 cities like Sydney and Melbourne, I love. And also you could consider regional areas close to the city. Yep. So for instance, we could be talking Wollongong, Geelong, Newcastle, Hunter Valley. Those areas I think have a lot of potential as well.
Awesome. And how do clients find you? And if they find you on your website and it's all Spanish and they don't speak Spanish, can they still work with you?
Of course. Everyone in our team speaks both Spanish and English. And I want to say that maybe 40 to 50% of our meetings are in English, because when we're talking to a couple, there might be one who's from Australia and the other one's from Latin America, for instance. But where do you find us? Yes, you can go to our website, but nowadays we're finding more and more people talking to us via Instagram. Again, if you see things in Spanish in Instagram, that's okay. You can text us in English. And WhatsApp. We're getting more and more WhatsApps, really. So,
awesome.
Yeah.
Well, thank you. Looking forward to 2026 and really appreciate you sharing your insights with us.
Thank you, Peter.
Thank you.